Hi, I'm Adam Manson, Chief Data Officer here at BVR. On behalf of BVR, thank you for watching our video tutorial on using the Stout DLOM Calculator, a tool that allows you to quickly quantify and support a subject company-specific discount for lack of marketability. Before we begin, we'd like to note that more information about the tool, data fields, data sources, methodology, and more is available on the FAQ page and in the companion guide. The Inputs page of the DLOM Calculator allows you to enter your subject company's name, if you wish, as well as your valuation date. You can select whether you want to adjust financial figures and historical transactions for inflation, whether you'd like to exclude any transactions that occurred after your valuation date, whether you'd like to exclude any transactions with registration rights, and whether you'd like to only use certain transactions that occurred during the various Rule 144 holding periods. These fields are pre-populated with Stout's recommendations. On the Inputs page, you will enter information about your subject company. Only one value is required, but entering more information will help with comparability in the following steps. If you are working with a public company, you may enter a value for its stock volatility in the volatility field. If you are working with a private company, you may enter an estimate for stock volatility or leave this field blank. Please note that the financial field should be entered in thousands. Once you have entered your information, you may advance by selecting Next. On the next page, you may review your selections and values you entered. You may select Back to return to the Inputs page and make modifications, or select Next to advance. The next step is the Restricted Stock Equivalent Discount Analysis. This step adjusts the value of the subject interest from a publicly traded equivalent level of value, or marketable non-controlling, to a restricted stock equivalent level of value. Since the goal in this first step is to determine the restricted stock equivalent discount and not the total discount applicable to the subject interest, the DLOM calculator bases this analysis on a comparison of small block transactions only, which are blocks less than 30% of shares placed. For determination of the restricted stock equivalent discount, the financial characteristics of the subject private company are analyzed in relation to the small block data in the study. The first part of the restricted stock equivalent discount analysis is the financial characteristics comparison. To perform a comparative analysis across the selected variables, the data in the study is sorted into 5 equal percentile groups, called quintiles, for each variable, and the median discount for each group is computed. The calculator then compares the subject entity with the data for each parameter to determine into which quintile group our subject company should be placed. The low, median, and high values of the quintile your subject company matches are also provided. Stout provides its suggested weights based on the factors that tend to be the most important determinants of the DLOM. You may use the recommended weights or enter your own weights. After you have weighted each variable, your weighted average indicated restricted stock equivalent discount is displayed below, along with an average and median. You may select Next to advance. The next step is the second part of the restricted stock equivalent discount analysis, called the best comparables analysis. While the first part, the financial characteristics comparison, compares your subject company to individual financial variables in the restricted stock study, the second part compares your subject company to issuers in the study with the same quintile matchups as your subject company. For example, 3 issuers in the study matched our subject company's quintiles for all 6 variables we entered, while 494 companies shared at least one quintile with our subject company. The greater the number of matches, the stronger the discount indication. However, careful consideration should be given to the transaction counts. Stout states that samples with fewer than approximately 10 transactions may not be considered sufficient to provide reliable discount indications. You will find both an average and median indicated restricted stock equivalent discount, as well as a range, at the bottom of the page. After you have reviewed the results, you may select Next to advance. The next step is the restricted stock equivalent discount conclusion, where you will select the restricted stock equivalent discount based on the discount indications provided by the financial characteristics comparison and the best comparables analysis. Generally, the best comparables analysis will provide discount indications close to the discount indication from the financial characteristics comparison analysis. In such cases, small deviations from the financial characteristics comparison discount indication may be warranted depending on the discount indications from the best comparables analysis. In other cases, primarily when all variables fall into the highest risk quintiles, the best comparables analysis may provide discount indications that are significantly above the discount indicated by the financial characteristics comparison analysis. In such cases, a significant upward adjustment to the discount indication from the financial characteristics comparison analysis may be warranted to arrive at the appropriate restricted stock equivalent discount. Once you have entered a value into the selected restricted stock equivalent discount field, you may click Next to proceed. Having determined the restricted stock equivalent discount, which is based on the risk characteristics of the subject company, the next step is to determine the appropriate market volatility adjustment in the event that a valuation date occurs within a period of abnormally high market volatility. As discussed in the companion guide, transactions occurring in periods of high market volatility tend to exhibit higher discounts. When determining a discount during a period of normal market volatility, which is when the VIX is less than 23.1, no adjustment is necessary as the transactions in the study used to calculate the restricted stock equivalent discount capture normal market volatility conditions. In this instance, we would use a 1 as the adjustment factor. However, Stout's analysis of the data indicates that the restricted stock equivalent discount tends to underestimate the actual transaction discounts during periods of high volatility, which is when VIX is greater than 23.1. Therefore, when the VIX is greater than 23.1, a multiplicative factor range between 1.1 times and 1.45 times is appropriate to apply to the restricted stock equivalent discount to determine the adjusted restricted stock equivalent discount. Primary consideration should be given to the trailing 6-month average VIX indication. However, near-term trends in the VIX may also be considered and given weight. After you have entered your adjustment factor, you may click Next to advance. The adjusted restricted stock equivalent discount that we just calculated, which was calculated by applying the market volatility adjustment to the restricted stock equivalent discount, represents the discount applicable to restricted stock issued by a public company that will ultimately have access to a public trading market. Interests in privately held entities are generally subject to significantly greater illiquidity, and therefore additional analysis must be performed to calculate the appropriate private entity discount. The factor that adjusts the value of the subject interest from an adjusted restricted stock equivalent level of value to a private entity level of value, or non-marketable, non-controlling value, is based on an analysis of the largest or most illiquid blocks of restricted stock in the study. This analysis involves comparing the discount indications for large block transactions, those that most resemble an interest in a private entity, with those for small block transactions, which are those we used in determining the restricted stock equivalent discount. For adjusted restricted stock equivalent discounts at or below 20 to 25%, the median or 60th percentile adjustment factors should typically be considered appropriate. For adjusted restricted stock equivalent discounts above approximately 20 to 25%, the 40th percentile adjustment factor should be given consideration. See the Stout Companion Guide for a discussion of the primary factors to consider in selecting the private entity discount. When you have selected your private entity discount, you may click Next to advance. In this final step, you select your discount for lack of marketability conclusion, which may be your selected private entity discount or a value that is above or below that figure. The Stout Companion Guide provides additional considerations to take into account when selecting your discount for lack of marketability conclusion. After you have entered your conclusion and click Next, you will have completed your calculation. On the final page, you may download your analysis and results to Excel, you may email the results to your email address, and you may print out the results and analysis to PDF or paper. Please note that the Excel download will provide you with the documentation on which transactions from the study were used in the financial characteristics comparison and best comparables analysis steps of your DLOM calculation. This concludes our video tutorial on using the Stout DLOM Calculator. For more information, please visit the Stout Restricted Stock Study FAQ page or read the Stout Companion Guide. If you have any questions, please contact customerservice@bbresources.com, or call 503-479-8200. Thank you.